morning, everyone. We will start the call. So after a long break, the Indian markets are set to kick off the new week on a weak note, tracking global cues. Asian stocks are trading mostly lower. US stocks also had declined on Thursday before the extended weekend. If we look at the data points, China declared its first quarter GDP, which grew by 4.8%. Which was a higher than expected figure of 4.4%, despite the impact of COVID lockdowns in many parts of the country in March. And oil prices have steadily risen over the last few days, with Brent climbing to $113 as concerns grow about tighter global supply, with deepening crisis in Ukraine raising the prospect of heavier sanctions by the West on Russia. I will now hand over the call to the technical team.
Thank you, Jihan. Good morning, all of you. This is Swati. Looking towards the Asian markets, IBD and Nifty is likely to open with a gap down at around 17,270, 17,300 levels. The selling pressure is likely to be continued into the Nifty as long as Nifty stays below 17,500 psychological mark. For the today intraday purpose, the first support is placed at 17,240. Any move below that level, we believe that the selling pressure is likely to be extended, which might take a Nifty towards 17,170 to 17,100 levels. From there onwards, we might see some bounce back rally from 17,100 levels. Coming towards the Bank Nifty for today intraday purpose, the support is placed at 37,280. Any move below that level, 37,000 levels can be tested. On the higher side, 37,900 and 38,100 are the important resistance level on the Bank Nifty. Coming towards the Nifty Finance, for the today intraday purpose, 17,080 will be the first support level. Below that level, 17,000 levels can be seen. Whereas on the higher side, 17,250 and 17,340 levels are the immediate resistance level on the Nifty Finance. Stock specific, as of now, we will not initiate any pre-market calls. Let the market settle down at the support level. Accordingly, we will initiate a buy or the sell call during a day. That's it from my end. I request you guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative side, we have been saying, important support was 17,500. The spot closed below the 17,500 levels. Also, if you look at open interest, 17,500 call now holds the highest open interest amongst calls. And there are some incredible amount of OI built up from 17,500 to 18,000 calls. So that does indicate some resistance and selling pressure on the lower end, while puts don't have that much open interest. So looks like, we might just go down, retest the 17,000 levels and probably take it from there. So 17,000 levels is an important level. If once that retest is done, some bounce can be expected from those levels. A good sign for Nifty is the PCR is now around the 0.7 odd levels, and the VIX is around the 17 and a half, 18 levels, which is below the 20 level. So it is coming down. So this fall should be arrested very soon, and we can probably look for the positives, probably a day or two more, or probably 3-4 days, and after that you can see a good amount of bounce back from Nifty upwards. So at this point of time, for the next 2 or 3 days, some fall is likely to come in. From the stock specific front, cement stocks did pretty well on Wednesday and are likely to continue the momentum on the upside. Even stocks like Bharti and Reliance have seen some OI shedding, that they've become lighter, so they can probably move up even further. Banks can see some pressure for today, and along with that, IT also. So look out for the same. That's it from my side. I like to ask the fundamental team to take over, please.
Yeah. Yeah. So continuing with banks, as Nirav said, the result of HDFC Bank was marginally below expectation. Although market share gains continue for the bank with loan growth very strong at 21%. However, this was at the cost of margins, and by reducing the lending rates and competing with banks, although bank is gaining market share, but overall net interest margin came down to 4%, which was the lowest in many years. So despite this, the bank overall, if we judge a bank, we have to look at the ROA. ROA is being maintained at 2.1%, which is encouraging. So and also if we look at asset quality, it has continued to improve, and if we look at the improvement, it is at close to FY17 levels, which is the best in last 5 years. So overall, from long-term perspective, the trajectory of the bank is developing very good. However, in the immediate term for next 1 or 2 months, there could be some pressure on the stock because of decline in net interest margin. So that was an HDFC Bank. Infosys result was also below expectation. Revenue growth came lower at just 1.2% versus expectation of 2.5%, mainly on account of one client related procedural issue. And also COVID was there in January month, and Q4 is also generally a lean quarter. Company has given strong growth guidance of 13 to 15% for FY23 versus expectation of 11 to 13%. So this is positive. However, the main setback is on the margin front, where EBIT margin came at 21.6% versus expectation of 23.3%. Company has given guidance of margin range of 21 to 23% against expectation of 23.7% for FY23. So with this margin guidance, the EPS expectation for FY23 has declined by around 5%. Order book was stable, and Infi ADR was down by around 8% in last 2 trading sessions post the result. So outlook in near term for Infi is neutral and positive for long term. ICICI Prudential life insurance result has improved. AP grew by around 4% year on year, broadly in line with the industry growth. However, VNB margins increased strongly to 29.7% versus year on year 24% and quarter on quarter 27%. So this happened as the share of high margin protection business increased. And although industry and company growth is slow in near term, we are positive from long-term perspective. I will quickly go through the results of 21st March, what expectations are for 21st March results. Cient result is expected to be declining. Dollar revenue expectation is that it will decline by 1.8% quarter on quarter, and also margin will decline by around 80 basis points QOQ. HCL Technology result will be declining quarter on quarter. CC dollar revenue should grow by around 1.1%, and margin will decline QOQ from 19% to 18.2%. L&T Technology result will be okay. Dollar revenue will grow by around 4% versus the previous quarter growth of 4.2%. So that is a kind of maintained the trend. Margin should remain stable quarter on quarter, although stock is expensive. Nestle result will be okay. Volume will grow by 5.9%. This is against December quarter growth of 7% and previous year's growth of 8%. So volume growth trajectory is slowing down. Revenue will grow by around 10% year on year. Margins to improve around 100 basis points from December quarter compared to December quarter. Tata Communication result will be okay. Revenue will grow by around 4% year on year and 1% quarter on quarter. Margin will remain flattish. Rajratan Global result is likely to be flattish quarter on quarter. Over here, the new capacity, full impact of that new capacity will be coming in the June quarter in case of Rajratan. So March quarter should be flattish and June should be strong. Rallis India result has improved, although Q4 is expected to be a lean quarter, but year on year wise, the growth will be 10% and margin is expected at 5.5% against year on year margin of 3.8%. So overall result should improve for Rallis. That's it from my side. Thank you.
Good morning, everyone. Jubilant Ingrevia has received a CDMO contract of rupees 270 crores for its specialty chemicals business. The order is spread over 3 years period. So this is overall positive for Jubilant Ingrevia. Thank you.
Yeah, that's it from us today. Thank you and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.